Well, the Fed really doesn't want anybody to be paying attention to the balance sheet. Taper tantrum scarred everyone at the Fed at the time. They realized how sensitive the markets are to news about the balance sheet. But I also think the markets are fixated on the balance sheet in a ridiculous way. The concern is that shrinking the balance sheet will cause some kind of liquidity crunch. And the idea is that it will cause a funding liquidity crunch. Examples of that are Bear Stearns and Lehman Brothers. So it's a concern, but if you look at any indications that that might be happening, and we can, in the public, look at a few of them, there aren't any signs that bank reserves are getting scarce. So in terms of a funding liquidity crunch, there's no sign of one. So I think the markets need to stop worrying about it. In terms of a market liquidity crunch, yeah, balance sheet tightening or quantitative tightening might be contributing on the margin, but there are a whole bunch of other factors that are causing market liquidity tightening, including, the U.S. Treasury issuing loads of T-bills to finance our ballooning deficit. And a market liquidity tightening, is that really a big issue? No, it just means that paper is a little bit more expensive. And so if you compare borrowing costs now relative to just before 2008, they're still a bargain. So I think that the markets are sort of acting a bit like a spoiled brat at the moment, and that the balance sheet is actually really just a red herring here.
Stephen, what do you think? What's your reaction as somebody who is in the market?
So you have to look at it. There's no rate rise that the market is going to like. So you have to be, when you look at this as a macro level, that's why I keep saying the math has changed. So you don't get back to 2950, 2940 in the S&P. If the numbers have changed, the allocation to asset bases has changed as well.
Steve, there was a quip yesterday about the punch bowl being removed from markets. Yeah. And it was a joke. It was a quip that Chair Powell said that, I've locked the punch bowl away long ago. It's deep in the cupboard or something along those lines. Do you think that was an indication that he's only changed the script over the last month because he was really forced to? And ultimately, as soon as he gets a chance to, he's going to cast the market aside again and just focus on the economy.
I think that's right. I think one way to think about, we talk about hawks and doves. I don't think you get to the point of being considered to be a central banker if you if you like zero rates. Nobody likes zero rates. Nobody likes big balance sheets. They all want to normalize, and I think this is going to be the script of the taper tantrum, where they're going to back off, let the market settle, and they're going to come back and do what they want to do, which is to get up a couple rate hikes from here and reduce the balance sheet.
Okay, so that sounds like it's a bait and switch if you're talking about something.
Absolutely.
All these calming talk, I don't really mean it.
If Megan's right, Becky, you actually have some experience. Not only are you an expert in financial markets, you're also an expert in little kids. And that's what you do, right? You pick fights when you can. But I want to ask you.
Yeah, but I don't lie to my children.
Yeah, you don't tell them the whole truth all the time. Come on, Becky. Come on, maybe. We're going to the candy store and ends up being the doctor. Megan, I want to ask you.
I've never done that.
Well, okay, Megan, I want to ask you a question. Have we? What's Clarida doing here? I mean, I thought he was pretty. I was surprised how dovish he was, sort of hinting here that things have tightened materially. Real quick, what's your sense of what Richard's doing here?
I think he's responding to financial conditions, which tightened massively in December, but have loosened a little bit since then. So I think also the markets didn't like Powell's commentary on the balance sheet. I think he was trying to correct for that as well.